Now we are going to start the cost topic. In any business, as we have discussed till this time, that every business is having a lot of costs. Some are your material costs, some are your other expenses, some are your labor costs, or some are your direct expenses, indirect expenses. There are a lot of costs involved when we talk about any business. If we are dealing in any product, we are manufacturers of any product, there are huge costs. Everything is a cost. And what we need to understand about cost, let's understand the different kinds of cost by the names of its classification. You can say these are just the bifurcation of cost, the names bifurcation of the cost. The first is on the basis of elements. If we are having any manufacturing unit, we are, let's suppose we are having a hand tools manufacturing unit. What is the cost on the basis of elements? The first will be the material cost. Cost of the raw materials which are used for the manufacture of the product. The second will be the labor cost. The labor cost that the persons who are manufacturing the products. Of course, the owner is not going to manufacture everything by his own hands. Of course, labor will be there. The cost which is paid to the labor will be the labor cost, and the other expenses, all the other expenses which are used for the manufacturing of that product, that will be a part of cost. And this cost will be, these you can say bifurcation of cost will be useful at the time of getting the figure of cost of goods sold. For valuation of closing stock, you need to get the value of cost of goods sold. For that, you need these kind of classifications. That what is your material cost, what is your labor cost, what is your other expenses which are incurred for the manufacture of the products. The other expenses can be the electricity expenses, or you can say the firewood expenses, the freight expenses which you have paid for the purchase of raw materials and everything like that. The next classification basis is traceability. There are two types of costs, that is direct and indirect. What are direct costs and what are indirect costs? As we have discussed in the last part, that there is a trading and profit and loss account. All the expenses which are directly related to the product will be a part of trading account. If we are manufacturing any product, every cost which is incurred for the manufacture of that product will be a part of trading account. And all the costs which are in trading account, these costs are called direct costs. And what are indirect costs? All the costs of the business other than the direct cost. Like we have seen in the profit and loss account, that is a residuary account, that every cost, every expense of the business which is not a part of trading account will be a part of profit and loss account. And all the costs, all the expenses which are a part of profit and loss account are the indirect costs. So this is the, you can say, the ground of just bifurcating the figures. Basically, at the time of taking cost of goods sold, what you need to take is all the direct costs which are incurred for the manufacture of the product. If you are manufacturing any product, all the costs which are incurred on that product will be a part of your cost of goods sold. The other ground of, you can say, cost bifurcation is the behavior. The first is fixed costs. Whether or not you are manufacturing anything, whether or not you are selling anything, whether or not you are working on anything, these costs are fixed. Like rent of the property. The landlord is not having any problem that you just take the land on rent and you just keep on sleeping on that land. No problem at all. He is going to take complete rent from you. That is your fixed cost. That is not going to be affected by the number of units you are selling. Let's say if I'm selling 10,000 units, this cost is same. If I'm selling 20,000 units, this cost is same. If I'm selling 10 lakh units, this cost is same. And if I'm selling 0 units, this cost is same. This is the fixed cost of the business. The next are variable costs. These costs will be increased with the increased number of production. That is, like your material. Your material cost will be incurred only when you are going to manufacture some goods. Only then the material costs will be incurred. We can say the labor cost can be somehow fixed, that we have hired the labor and now we need to pay salary on fixed basis whether or not they are working on anything or not. Now, what are variable expenses which will increase with the increase in number of production? If I am producing 100 units, the raw material for 100 units will be consumed. If I am manufacturing 1000 units, the raw material on the basis of 1000 units will be used. So these are the variable expenses which will rise with the rise in number of units which you are producing. The third is semi-variable. That means some portion is fixed and the balance is variable. In this, we can take up an example of electricity bill. Whether or not you are using electricity, whether or not you are doing anything, there will be some fixed charges. That is fixed portion, and the balance will be variable portion on the number of units which you have consumed. These are the semi-variable costs. Some portion is fixed and the balance is variable depending upon the number of units you have consumed. So all these costs can be bifurcated on multiple bases, but for the calculation of cost of goods sold, for the valuation of closing stock, this will be useful for you. All the goods which you are selling, the cost of those goods will be calculated on the basis of labor, their material cost, their other expenses. The direct costs will be a part of your cost of goods sold. The next is break-even point. What is break-even point? Break-even point is just a point that on which you are at the situation of no profit, no loss. Let's suppose we are having fixed costs as well, we are having variable costs as well. If we are not going to manufacture anything, our variable cost will be 0, but our fixed cost will be there. That will be a loss. If we are producing 10 units, variable cost of 10 units will be there and fixed cost will be there. And we will see that whether we are recovering that fixed cost or not. Break-even point is the point at which you are at a situation of no profit, no loss. You have recovered all your variable costs plus all your fixed costs, and beyond which, let's say I'm having break-even point at 10,000 units. If I sell 10,000 units, I will be at no profit, no loss situation. And after crossing 10,000 units, that portion will be the amount of my profit. Not completely, but after deducting the variable portion. Let's take up an complete example on this. We are having manufacturing unit and I'm preparing 100 units. At 100 units, I'm having my break-even point. If I'm producing 101 unit, the value of that 101 unit which I'm selling in the market is 100 rupees. That means my additional revenue is 100 rupees and my additional cost, that is variable cost, is 10 rupees. 90 rupees will be my profit. So this is how the break-even point will work. The break-even point is just for the analysis purpose. The earlier is the break-even point, the more will be the profit. That means when you are getting your break-even point, your no loss, no profit situation in the early stage. That means whenever you will go up, you are selling more and more units or you are producing more and more units. That additional units, after deducting the variable costs, will be your profit. That will be used for consuming your other expenses and profits. So earlier is the break-even point, more will be the profit. Later is the break-even point, lesser will be the profit. This is what is the meaning of break-even point, and this analysis is also very important for checking the credibility of the business. Let's say we are producing 10,000 units and we are selling those 10,000 units. We are just producing and selling the units, and our break-even point is 8,000 units. That means we are having only 2,000 units left for the profit portion. And out of that 2,000 units, first of all, the variable costs of that 2,000 units will be deducted, and then the balance will be the profit. That means the profitability of the business is less. There are less chances that this business will survive for a longer duration of time. And if the break-even point is at 3,000 units, balance 7,000 units additional revenue other than the variable costs. After recovering the variable costs, that will be a profit. That is a clear indication that this business will survive for a longer duration of time, because this business is having profits which will be retained in the business for the longer duration of time. And that retained earnings will be used for further investments and for expansion, for diversification and everything. So this is the importance of break-even point. Let's suppose we are just saying that in some industry we are having break-even point at 1,000 units, and in other industry we are having break-even at 200 units. This is not a clear indication that the other company whose break-even is early is better. This is not the only way to judge. But yes, you can just have an idea about that. So this is what break-even point is. This is what costs are. The direct cost will be the part of your cost of goods sold at the time of calculation, the calculation of the value of the closing stock. So this was all about the bookkeeping, accountancy and the costs portion. What is the break-even analysis and everything. So thank you very much for this class. Thank you.